Good morning, everyone, and welcome to this, the second webinar in our series of 3 webinars to get UK traders ready for the new customs regulations as from the 1st of January. I'm just checking that people can hear me. Maybe if just Rob or Jeff could just unmute and let me know that everything's okay with the sound.
Yeah, fine, yeah. Tony, thank you.
Yeah, all good.
Okay. Fine. Okay, my name's Tony Shally. I'm the Managing Director here at Espace Europe and head of all things Brexit. This webinar today will be focusing, as you know, predominantly on importing into the UK from the 1st of January and the new regulations. The webinar will last about 40 minutes. We'll be doing a Q&A at the end, but we'll be looking at some questions as we go through. There will be a recording and the slides will be sent hopefully tomorrow. You have the ability to ask questions. If you just take your cursor to the, I think it's the bottom of your screens, you'll see a Q&A icon. Just click on it, pop a question in there, and Rob and Jeff will probably be looking. Just a second, saying the speaker's not working, but I think that's okay.
Your audio is just breaking up, Tony, again.
Okay, I'll take the video off and pop the screen share on. Okay, so I'll just stop the video. Okay, so my video gone now, Jeff?
No, it's still there.
Okay, fine.
Here we go. Sorry, got the slides now.
Okay. All okay, Jeff?
That's full screen now, yeah, thank you.
Yeah, okay, so video recording will be coming out tomorrow. Okay, we'll get going. Okay, so on the webinar with me today is Jeff Yates, my commercial manager, who is in charge of the commercial development of our customs products, the Customs Clearance Consortium, Customs Consortium, and Rob Price from Clearlight Customs is a customs consultancy business, and Rob and his business partner Helen have been helping us massively over the last couple of years with advice on all things Brexit customs. We're sharing Rob's details with you at the end. Topics we're going to look at today, some are a bit meatier than others. Predominantly we're spending a fair bit of time looking at topic 2, the different ways now that goods will need to be declared for import declarations in the UK. Yeah, so a couple of topics at the end. I'm really more for your information, return packaging and commercial samples. But we'll be having, you know, get some questions to us. For anyone that's just joining the webinar, there is a Q&A icon at the bottom if you take your cursor to the bottom of the screen. And we'll be looking at questions as we go through, but predominantly we're answering those questions at the end. Okay, 31 days to go till the end of the transition period. But unfortunately, it's not 31 days because I don't think anyone's going to be working 31 days between now and the end of the new year. Christmas Eve, it's pretty much a non-day. If you're not working between Christmas and New Year and you have a day's holiday to do a bit of Christmas shopping, excuse me, then we're probably looking at 25 days more like. I'll just turn the alarm off on my phone. 25 days more like. So that's not an awful lot of time, but 25 days is 225 hours, which is ample time to get Brexit ready. And I think the problem is a lot of companies don't actually know what they need to do to get Brexit ready. But we'll get you Brexit ready in 2 to 3 hours of your time and 2 to 3 hours of our time. And 1st of January, you will be ready. Come January, we will not have time to get people Brexit ready. We're just going to be too busy with the new regulations, too busy doing customs. So take it seriously and make those plans now. So importing into the UK. So every import has to start with an export. Every import starts with an export. Why is that important? That's important because you, as the UK importer, are not in charge of the EU export. You can't make the EU export declaration to declare the goods that you want into the customs system of the country of your EU supplier. That really is the job of the EU exporter to make that export declaration. So if your EU supplier isn't ready, then they can't declare those goods to export in their country. You can't get those goods for import into the UK. So it's really important that you make checks now that your EU suppliers are ready. Do not assume that they're ready. You can spot the obvious error. I've got 2 number 4s on this, but so there's 9 points on here. And I think it would be a smart move to either put these points into a letter and email it to your EU suppliers to double check that they've got all this covered, that they can say yes to the vast majority of these questions. So point 1, don't assume they have an EU EORI number. You think that everyone would have an EU, but they may not. Do they have a customs agent to make export declarations? If they don't, they can't declare the goods to export, and they can't export them. Have you agreed Incoterms with them? Yeah, you know, everything at the moment is collected or delivered. Either you're collecting the goods from them or they're delivering the goods to you. That's all going to change from January. We absolutely need to choose the right Incoterm to allocate the responsibility for what needs to happen, VAT and duty and import declarations. If you're using DDP or they're using DDP, they're delivering goods to you under DDP terms, you know, have you checked that they've got a UK EORI number, a VAT number, and they've got an agent in place to make the UK import declarations? DDP might be easy for you, but it's not for them. There is time still to do this, but you know, that's another point. So don't be expecting DDP to be easy for them. Have they got your EORI number? Really important. I'll come back to that later with regards to import declarations in the UK. They absolutely need your EORI number. Their invoices should have a CPC code on, a customs procedural code on, so that customs know how you want your goods, their goods, EU suppliers' goods, to be treated by customs, be it's a permanent export from Italy to the UK or it's a temporary export. That's what the CPC code will tell the equivalent of chief in Italy, for example, if it's an Italian exporter. Also, are there hauliers and forwarders capable of navigating the new EU port entry requirements? So everything changes now on the 1st of January. Hauliers just can't turn up at Calais, get on the tunnel or a ferry and come into the UK. They've got to do certain things to really allow them access into the port of Calais or the terminal for the Eurotunnel. If they can't navigate these new IT systems, they're not going to be able to ship into the UK. So, you know, to make sure that their hauliers and their agents they're on board with this and they know what to do. To make a UK import declaration, you need a 10-digit commodity code on their invoice to you. Come January, we don't really want to be seeing invoices for import custom with 8 digits on, because we need 10. And also, if they're sending commercial invoices to you with multiple commodity codes on, you really do need to make sure that they are separating those commodity codes on their commercial invoice to you, showing the individual weights, net weights, and pieces, because that's the level of detail that a customs broker in the UK will need to make the UK import declaration. I showed this slide on our last webinar on exporting, but it equally applies to EU supplier invoices. So you can see here where my cursor is, we've got 4 pallets, 150 kilos, £1,000 under DAP, delivered at place terms. So these 4 pallets here are broken down into 2 individual commodity codes, and they need to show the number of pieces for each commodity code, the gross weight for each commodity code, the net weight for each commodity code, and the value for each commodity code. And all these fields here need to add up to these fields here. That's really, really important. And you can see, obviously, too, we've got EORI numbers for both you, the importer, and them, the exporter. So if their invoices look like this, there shouldn't be any problem at all making an import declaration in the UK. TSP is dead. TSP was a temporary easement that the government put in a couple of years ago in the event of a no-deal Brexit. Everyone was encouraged to get a TSP number, or was even auto-enrolled to get one. Now TSP is not a means through which you can import goods into the UK. So the government have replaced it with two ways of making import declarations from the 1st of January. a full import declaration, sort of standard way of doing it, and deferred declarations. So there's, if you want to know a little bit more about this, in the next slides I'll talk individually about each way, but that's a link with a lot more information on. So full standard declarations, very simple. How it works today with sea and air freight, you bring goods in from outside, from the States, for example, and your customs agent will make a pre-lodged UK import declaration prior to the arrival of those goods. As the goods arrive in the UK, the agent will send an amendment message through to Chief to complete that declaration, which triggers the VAT and the duty. And that declaration will need to be made the day after the date of the arrival of the goods. So that's the standard way of making a full imports declaration. There's a handy little interactive guide here. That's the link to it. So if you want to know more about making full standard import declarations, every time you see the word show, that will tell you a little bit more about what you need to do. And that's on that link there. So deferred declarations. There are two ways to make deferred declarations. I won't labour too much on this first one. This is, as it says there, really more suited to high volume importers and parcel carriers. But if you're bringing a lot of goods into the UK in a short period of time, a customs broker will not have the time or the capacity to make a full import declaration, a pre-lodged declaration for you, and complete that on the day of arrival or the day after, because there's 60 or 70 fields for them to complete. So what they can do is complete a simplified frontier declaration, 14 to 16 fields, but at a later date, they will make that supplementary declaration to finalise the import declaration. That is a way of getting lots of declarations done on a simplified basis at the frontier. But one way that the government really is trying to push now is something called EIDR CFSP. EIDR stands for Entry into Declarants Records, and effectively in basic terms, this just means that the importer needs to keep a record of the imports of the imported goods that arrive at their premises. That could be a record in a spreadsheet or in their ERP system or whatever system they're using. They just need to keep a record. And at a later stage, they need to engage a customs broker who has access to CFSP, Customs Freight Simplified Procedure, to make those declarations. So it allows the import declaration, as it says there, to be deferred for 6 months from the date of the entry into the UK. So if you import goods and they arrive at your premises on the 10th of January, you will have till the 10th of July to make that import declaration. Likewise, if they're coming in on the 30th of June, you've got till the 30th of December to make that import declaration. But this is a 6-month deferment period, an easement for 6 months. So come the 1st of July, we will revert to the standard as is of today period, which is that declaration will need to be made by the 4th working day of the following month. So any goods that arrive from the 1st of July to the 31st of July will need to be declared through this EIDR CFSP system by the 4th working day of August. So why have the government put in a deferred system like this, which is allowing importers to enjoy 6 months of not having to make their declarations? Probably two or three reasons. The first reason is they probably think there aren't enough customs agents as of the 1st of January to start doing this. Probably right. Second reason, sorry, just got a call, just getting rid of that. Yeah, there won't be enough customs agents and people won't be Brexit ready. Commercial invoices won't be as they need to be. And third reason, it keeps the flow of goods coming into the UK. We're not stopping trucks at borders. So that's probably the three main reasons why, just to buy us a bit more time so we can get enough agents in place to cope with the volume of import declarations. Who can use EIDR? So anyone can use it as long as you have a good compliance record with HMRC and you have an URI number. If you have a poor record with HMRC, they will be telling you by means of written communication to you and be instructing you to use the full declaration method. Can all goods be imported using EIDR? No, they can't. If you're moving any of those types of goods or under those customs procedures, then you'll need to make full import declarations as from the 1st of January. So what format does the record that you need to keep be made in? And all the government says that it needs to be an electronic format. So they don't want pieces of paper. They just need to be an electronic format. Okay, there's a lot of information on that slide, and that is the current, that's been pasted from that link there on the government website about making EIDR records. So importers keeping a record of their imports coming into the UK. There's a lot of information there. So what we're doing for our customers, we're going to simplify all that. We're going to take out, we're going to audit that some of these fields are not pertinent to them, and we'll send them a spreadsheet which they will complete, which they will enter all their records, import deliveries on, and then we'll agree a time after which they'll send us that spreadsheet. So if they're a high importer, we might do it every 2 weeks. We get the sheet from them every 2 weeks. We make the CFSP entries for them and send them back their entry numbers. If they're importing perhaps not quite so much product, we'll do that every month, but we will keep on top of it. We will be advising people not to wait 3 or 4 months to start making import declarations. So that's sort of pretty much it on imports declarations and the way that it's going to happen. Just wonder if Rob or Jeff, you had anything else to add to that, or if there were any questions in the Q&A yet on that.
Yeah, there's nothing else to add, Tony. I've got a couple of questions. Samantha Hodgkins, hello Samantha. EIDR seems similar to IPR. Where does IPR fit into this? So you'd use IPR for goods which will be coming into the UK and then going back out. So it's a relief on the duty on there. EIDR will be for permanent imports for domestic use. And Tim Reed has got a customer wanting to make full import declarations from the 1st of January. Tim, that is absolutely fine. You can still do that.
Oh, no, also, you can, I wouldn't advise it, you can use both. I don't know why you would want to use both, but if you had an import coming in, you could use a pre-lodged and then complete that full declaration on the day of entry or the day after. And if you had another job coming in another day, you could keep a record of that in your own records. But I would advise against it. You do not want to be, I don't actually know what the implications are if people don't complete EIDR correctly. I don't know if you've got anything to say on that, Rob.
Yeah, I'll make a couple of comments on your very specific point there. What happens if you don't do it right? I guess ultimately you as the importer will be held responsible by HMRC.
Yeah.
So obviously, we'd encourage everybody to study the records you need to keep and keep them. Being pragmatic, how are HMRC going to check? I honestly don't know the answer.
No, nor do I. No.
Perhaps just a couple of other points. To Samantha Hodgkins' specific question about IPR, a practical concern would be if you defer the declaration but want to reship the goods out with IP, you've got to match the import to the export record. So maybe that's one to take offline, Samantha. Just thinking about the practicality of doing your bill of discharge for IP. Well, that's quite a specific area. Just a couple of other points, Tony. I'd underline something you said about keeping on top of declarations during the first 6 months. As an importer, you are responsible for making sure the declaration's done in that deferred period. So as I think Tony alluded to there, do not be encouraged or think you can leave it all to the last minute, because that is a recipe for a problem. So
yeah,
those would be my comments at that stage.
Yeah, but actually this EIDR CFSP route is a 2-stage process. effectively when the UK importer keeps a record, that is part of the import declaration. Is that right, Rob? Although it's not an official part, a registered chief, it is part of the process. So if you're not completing that correctly, you're opening yourselves up to a can of worms with HMRC.
Yeah,
so
absolutely. The legal basis to allow the goods across the border, let's say at Dover, is that local record that you as an importer are keeping. And once you commit to that local record, you are also committing to complete the supplementary declaration through a broker within 6 months. So once the goods have passed to you under that scheme, then you are obligated to HMRC to complete the process. So just because you've got the goods, you do need to keep a record, and you do need to make the arrangements to complete the declaration on time.
Yeah. Okay. So a couple of questions that, we've been doing sort of a lot of Brexit audits with a lot of our customers in the last month or so. And they're saying, so what route shall I use? Shall I use EIDR and keep a record, or shall I go for full import declarations? And it's very much on a case-by-case basis. Depends potentially on the volume of imports that you're bringing in. It depends on the complexity potentially of the imports. It obviously depends on what you're bringing in, because some goods are not available to use EIDR with. So that's a conversation we could have with you, or we're having with our importers now. But it's a decision that you need to make as a UK importer, which route you're going to choose. So if there's no more questions, if you've got any more questions, anyone on EIDR or CFSP, pop them in the Q&A, and we'll address those at the end. Okay, so importing goods into the UK under DDP terms. Yeah, so DDP terms might seem great for you, the UK importer. You don't have to do anything, but it is not great for the EU, your EU supplier. So just be very careful with DDP terms. It's very simple at the moment. It's either collected or delivered. You're collecting from I'm just going to say the Italian supplier. You're collecting from the Italian supplier. You're organising it from the UK and bringing it into the UK, or they're delivering it to you. Very simple. But come the 1st of January, we've got VAT and duty to handle. And that is particularly difficult under DDP terms for an Italian supplier, for example, because they, as it says there, will now be responsible for the UK duty, customs clearance, and VAT. They will need a UK VAT registration and a UK EURI number. Not tricky to get, possible, but I would hope they would have it by now if they were using DDP. Probably the most important section on this slide is that if they are supplying you DDP, or you're pushing them to do that, then they will need to engage a UK customs broker to make UK import declarations for them. But that will have to be on an indirect representative basis. And that makes the broker jointly and severally liable for the customs debt. Because they are a non-established foreign importer, and they will have to work on an indirect basis. Finding a customs broker on the 1st of January who isn't going to be up to their eyes in customs declarations and sorting out commercial invoices will be tricky. They will be very, very busy people. They will not need to take work on from non-established foreign importers on an indirect representative basis. They don't need to do it. There's too much work out there. Why would they take the risk? So that is a problem for DDP if it's practically going to be really, really difficult for an EU supplier to supply you under DDP, just because they're probably going to struggle to find a broker to take them on in the UK to make that declaration. And what actually happens when an EU supplier supplies you under DDP terms, they become their virtual UK entity with their UK VAT number and their UK EURI number. It's that UK entity that actually supplies you. So they end up charging you. They supply the goods to you, they invoice you, and they charge you local VAT at 20%. You claim that VAT back, that they sort the VAT out on their VAT return. So you still pay, you still have to account for the VAT, it's just local VAT. So yeah, there are some pitfalls with DDP that you really do need to be aware of. You have to agree these Incoterms prior to the 1st of. You do not want to be suddenly have a DDP Incoterm thrust upon you, and those goods cannot clear in the UK on a full entry because the EU supplier hasn't got a way to make the entry. So far better if your EU supplier is supplying goods to you, is organising the transport, is to agree DAP terms. Their responsibility then is to get the goods to your premises. Your responsibility is to pay any duty, if any is due, to sort out the import declaration, and to pay the VAT either on a deferred basis or on arrival if you choose the full declaration route. If you're organising the transport from the UK here, and you're organising a UK company to put a truck into Italy, for example, to pick your goods up, then you really want to be agreeing FCA Incoterms, free carry arrival. You do not want to be agreeing Ex-Works, which is probably what you think is the correct term at the moment, maybe, because Ex-Works makes you, as the UK importer, responsible for making the EU export declaration. And you really don't want to have that responsibility. That needs to be the responsibility of the EU exporter for a number of reasons, as you can see there. You know, if I was the EU exporter, the EU supplier, I'd want to be making that declaration myself, because I need to make sure that declaration's made, because if it's not made correctly or not made at all, then the EU supplier has a problem, because they cannot legally, they haven't zero rated their VAT to supply those goods to you. And you could have the goods delivered to you, and then the equivalent of HMRC comes knocking on the door of the Italian, your Italian supplier, saying these goods weren't declared to export. We've got a VAT problem, and they get a VAT bill that they can't claim back. And then you've all got a problem. So put that responsibility onto the EU supplier, and you do that by using FCA terms. You don't get the cost. Export declarations in the EU are expensive. They are more expensive than they are in the UK. The €55 I've been quoted, £50, €55 to make those declarations. So that's another cost you can do without. And you don't need to find an EU agent to make those declarations. So why agree Ex-Works terms? Just agree FCA if you're organising the transport. The UK global import tariff. So the government on the 19th of May published their global tariff. And this basically are the tariff rates that will be applicable from the 1st of January in the event of we don't get a free trade agreement with the EU. These are the tariffs that will apply for goods coming in from the EU and from other places in the world. So the government really stripped back this to try and obviously they don't want to penalise UK importers by having unnecessary duty applied to their raw material products that they're going to be using. So they really have stripped back. They reduced the duties where they can. They simplified it, and they've taken 2,000 products completely out of the tariff, duty free. But one thing it does mean is that if we don't get a free trade deal, a free trade agreement with the EU, and a free trade agreement will, or we're assuming, will reduce. There'll be no duty on our exports and no duty on our imports from the EU. But if we don't get an agreement, then we can't have a special deal with the EU. We have to have the same deal for everybody. So if you want to know what duty might be applied in the event we don't get a free trade agreement on your import goods, there's a little handy tariff checking link. Pop your commodity code in there, and it will tell you what duty is available, will be applied, if any. Okay, really important point here. One that many companies over the years haven't really looked at, because a lot of them have just sort of said, oh, I'll just get my logistics company I'll just use their deferment account. You know, we're all going to be really, really busy people in January. Getting our heads around these new customs regulations, getting our heads around VAT and duty. So getting a duty deferment account will be a really smart move if you're bringing any imports into the UK, even if it's really small, even if it's a couple a year. Then I just think it's a very wise move, and I'll explain on the next slide why. If you're not familiar what a duty deferment account is, as it says there, it's normally needs to be backed by a bank guarantee, and basically it simplifies the payment of duty. So if you're bringing 7 or 8 import shipments in a month, instead of having to make 7 or 8 payments to HMRC, or 7 or 8 payments to your logistics company who are paying the duty for you, you can defer that duty till the following month, and it's paid by direct debit. But currently you do need a bank guarantee in place to get it, but that is changing. So there are many benefits. As I said there, you can defer the duty to the 15th day of the month following. You haven't got to pay it immediately on arrival. It's obviously a lot quicker. You don't have the aggravation of having to make all these payments. And it's a lot cheaper to have your own duty deferment account. You know, most forwarders are charging a £15 admin fee and 2 to 3% of the duty amount. And it all adds up, and it is completely unnecessary. You do not need to use a forwarder's duty deferment account, because a couple of weeks ago, the government released a new duty deferment account, which doesn't require a bank guarantee. And that's a really, really big move. So yeah, first of all, I would say check if any duty is going to be applied on the regular commodity codes that you're importing. And if it is, you know, start to do a calculation of what duty you're going to be incurring on a monthly basis. And if it's going to exceed £10,000, then I'd suggest that you apply for a higher limit. And you can do that by using something called a CCG1F form. We completed one of these about 6 weeks ago, and within a couple of weeks, the higher limit was accepted. It really is a very simple form. It's just a little bit of sort of 3 years of your accounts details, your various bits of accounts information. It wasn't onerous, I didn't think, at all. So if you think you need more than £10,000 in a duty deferment account, do pull that form off the internet and send it off. There is a link there to tell you all about how to do that. This is the information that you'll need before you make that application, so make sure you have that information to hand. And there's the link at the bottom in orange, which will take you to the site to apply for a duty deferment account. I cannot encourage you enough to apply for your own duty deferment account. Yes, forwarders will make money from offering duty deferment, but I think, and brokers, and customs brokers in particular, that's their business. But me, as a business offering custom services, I am not interested in making money from duty deferment. There's too much to do. We'll do it, of course, if people haven't got a duty deferment account, but it's something that I will not be focusing on at all. And I just encourage everyone to get a duty deferment account. It's free. Why wouldn't you? A lot of people have been talking about postponed VAT accounting, and one thing I've noticed that no one is actually explaining how to do it. So I thought I'd try and address this here. So on the 1st of January, VAT will become payable on UK imports coming from the EU, whether there's a free trade agreement or there isn't a free trade agreement. So what the use of PVA does, postponed VAT accounting, it allows for the you don't need a physical payment of VAT on the arrival of goods. So you haven't got to transfer the VAT to a broker to pay that VAT on your behalf. And it means that you can account for that VAT on your VAT bill, and you can declare and recover import VAT on the same VAT return, rather than having to pay it up front and then making and claiming it back later. And also, you don't need to be authorised to do this, to account for VAT on PVA terms. But the two really important things that you need to make sure that you're doing, you obviously need to tell your customs broker that you want to use postponed VAT accounting, and make it crystal clear on your standing instructions to them and on individual clearance instructions that this is how you want your VAT to be accounted for. If a certain field in the customs declaration isn't completed properly, which I'll allude to later, then that VAT is applicable on entry. So you absolutely want to make sure that your broker is aware that you want to use postponed VAT accounting, and make sure they're completing the customs declaration correctly. And obviously, your accounts department need to be aware and understand the impact of this. Okay. So when can you account for this import VAT on your VAT return? So you can do it if the goods are going to be used in your business and you've got an EORI number and a VAT number that is used on the customs declaration. One. Secondly, do you need to set this up? No, you don't. Basically, it's triggered by the use of your EORI number and VAT number on the customs declaration. But as I said before, I think it's box 47E on the import customs declaration, the customs clerk needs to enter G in that field. And what that does, it will record the VAT against your EORI number on a declaration level only. So it doesn't mean that you need to pay that VAT on arrival. It will get allocated effectively with the use of the letter G onto your VAT return. Okay. Now the more technical stuff, but I am not going to go into the detail on this slide. This slide is a slide for your accounts department. It tells them exactly what they need to do with regards to their VAT return and the boxes that need populating on there. So I'm not going to go into the detail. It's all there. The only thing I would say is that if you're using deferred declarations, if you're using EIDR, for example, and let's say your VAT quarter is January, February, March, you need to, I don't know, make your VAT return on in early May, but you've still got those records of, let's say, the first 2 months. You've kept them. You haven't got to declare them, as you know, but you've kept them. So you will need to account for the VAT. You need to make an estimate of the VAT on your VAT return and then make an amendment of that VAT at a later stage once you know what the VAT has been paid. So that's why I'm suggesting that people keep on top of this, that if you're going to use EIDR CFSP, that you keep on top of it, because adjusting VAT returns and estimating VAT is fiddly, and it's just better just to have the exact amount of VAT that you've incurred on that VAT return and not have to make estimates. I don't know if there's any questions on that on the chat or on the Q&A, or if Rob or Jeff had anything to add.
Hi, Tony. I'll just step in just to underline to everyone that the VAT rules per se are not changing. So this is just a method of dealing with VAT at the border. You must speak to your finance or accountant or tax advisor to make sure you are entitled to recover the VAT. That's just a general sort of health warning that just because VAT appears against your name does not automatically entitle you to recover it as part of the VAT return. That's my only comment. Okay.
A few questions, Tony, but one we'll have a look at the end. But Amelia Welling Thomas just asked, what's the higher limit of a CCG1F form? My understanding is that there isn't one, but it has to be backed by a guarantee. Is that correct, Rob?
Yes. So what a CCG is doing is asking you to provide financial information, as Tony mentioned, the last 3 years of your accounts. What HMRC are looking to do is to look at the financial credibility and solvency of your business. So it depends on how much you're asking for compared to the financial credibility of your business. So there is no upper limit to what you can ask for, providing your accounts support that risk to HMRC.
Yeah, okay. So just to reiterate that, then, yeah, deferment accounts, it's a very simple process to get a deferment account. You get to £10,000 without with the bank guarantee. Yeah, and you can apply for a higher limit with the use of a CCG1. And if your accounts are, if your financial information is good, then you potentially will be able to apply for a 100% waiver on the bank guarantee. So you could get a higher duty deferment account without having to have a bank guarantee, because you will have qualified for a 100% waiver. So when you will find that out, the customs people will let you know whether they're willing to give you that waiver or not. Okay, so that's on VAT. Okay, alternative means of transport to import goods into the UK from the EU. So this isn't about customs. This is, as you can see, this is a scene which unfortunately I think we're going to be seeing in January. This is probably the M20. Well, it's not probably, it's probably definitely the M20. So if the M20 and Operation Brock is in full swing, vehicles are parked up in lorry parks because they haven't got the right customs declaration to get goods out of the UK, that is going to have an impact on availability of trucks to come into the UK with your UK imports. We've been so focused on the Straits of Dover and the Eurotunnel over the last 30 years. It's the quickest, most convenient and fastest way out of the UK into the EU. So it's no surprise that the vast majority of trade in and out of the EU comes through the Straits of Dover. But it's a wise move to start looking at other ways to get goods into the UK from the 1st of January if we've got a lorry park on the M20 and we've got gridlock. So we here have been looking at a number of different ways to bring goods into the UK, which doesn't require European drivers being in the UK. And that's the really important point, that now if we've got gridlock on the way out, there'll be a shortage of vehicles in the European Union to bring goods in. Plus, gridlock on the way out is going to turn European hauliers off coming to the UK. So we will definitely see less European drivers in the UK, certainly in the first few months of next year till things have settled down. So you need to be thinking and speaking to your logistics companies about, so what alternatives are there if suddenly EU driver supply dries up? So one thing that we've been moving a lot of goods into and out of the UK and from the UK using intermodal transport. Yeah, you know, they're all there. There are many companies offering intermodal transport at the moment. So as you can see there, the trailer, these are curtain-sided intermodal trailers, you know, 1360 long, up to 3 meters high, some of them. So they're basically like a standard trailer, but they're just transported on train through the tunnel. They don't require an EU driver to enter the UK. The goods will arrive at a rail terminal in Daventry, for example, and a UK driver will pick that up. So yeah, that's a good alternative way where we're not relying on European drivers to enter the UK. Unaccompanied trailers, for those of you that perhaps don't know what an unaccompanied trailer is, it's basically, so an accompanied trailer is one with which the driver and his cab unit will stay with the trailer all the way on the ferry or on the Eurotunnel. Unaccompanied trailers, when the driver collects in Paris, for example, you'll come up to, well, let's say the driver collects in, I don't know, Rotterdam. He will arrive, sorry, collects in Holland and arrive at Rotterdam. He will uncouple his trailer and that trailer will ship unaccompanied over to Felixstowe, where a shunter vehicle will take it off the ferry and a UK driver will be allocated to pick that trailer up. So why are unaccompanied trailers of interest? Again, they don't require European drivers to enter the UK because it's UK drivers that do the shunting to and from the ports, collecting the trucks and delivering the goods. These are some of the ports through which we have unaccompanied trailer movements. As you can see, Dover isn't listed there. Dover is a that's, well, I don't think there's any unaccompanied services through Dover, certainly not on the Eurotunnel. I'm not aware of any unaccompanied services out of Dover. So there are ways of putting goods into the UK where we don't need European drivers. On our website, there are pros and cons of using both of these alternative means of transport. So there are the links to them. And finally, one that perhaps a lot of people have never ever considered is something called European short sea shipping. So actually we're loading goods in containers in Europe, and we're getting those containers brought up to Northern Europe seaports. Those containers are loaded onto short sea shipping vessels and brought into the UK to a variety of different ports and collected from the ports and delivered. So just another alternative way of doing it. I've given you some basic dimensions there of 40-foot container, but you can get pallet-wide containers and high top containers. So and they can take a little bit more weight. So all those red dots on the right-hand side are all the seaports. So we're not short of seaports. So we have a solution in place again for short sea shipping in the event of our supply of European drivers drying up. To make, for any customs agent to make a declaration on your behalf, import declaration or even export declaration, you really do need to provide an authorization for them to do so. So I won't labour much on that. If you haven't done that with your customs agent, make sure you get the text and put it onto your letterhead and get it off to them. It's just a belt and braces approach, and no customs broker should be engaging any customs work unless they've been authorised to do so by you. Won't labour too much on the last 2 points, but yeah, if you're an UK importer and you receive regular goods from an EU supplier and they're supplying them in a return in a package like this, a check package like that, or any packaging which they are returning, that they want returned, then you need to think how that's going to be handled, because that, if you wait and get half a load of those return packaging to send back to them and they organise it to get that collected from you, that's an export. That will need an export declaration. That could be subject to EU VAT unless it's handled correctly. So these packaging, when they're brought into the UK, potentially need to be brought in on a control basis and as a temporary import. And you don't want to be paying duty on packaging coming into the UK. So yeah, it's definitely something that you need to think about if you have a return packaging issue. Obviously, lots of people in automotive have this issue. Yeah, we'll help as much as we can. There's a link there. But really, it's for you to agree with your EU supplier how you want the packaging and how you're going to control this packaging between you. And finally, on these main points, yeah, I won't belabor much on this. You're getting samples from the EU at the moment from suppliers. Just make sure that they're aware of how they need to handle them now, so that we can claim relief for duty of those goods coming in. So first of all, they need to prepare the goods in the correct way. So there's 4 points there on how they need to prepare those goods. The import declaration needs to be done correctly in box 37, so that we can claim relief from import duty. And there's a link there to show you all the information on commercial samples. So if you've got commercial samples coming in, I'd advise you to look at that link. This is the importers audit that we're doing now with people that we're onboarding into our customs consortium. We've also got an export audit. So it's 20 odd questions there, which are 20 really good questions to make sure you've got the answer to. So I suggest that you all, if you don't think you're Brexit ready, make sure you've got the answer to those questions. And finally, I've just done a to-do list. I just thought, coming on a webinar is great. It really shows that you are interested and you really do want to get Brexit ready. But there is no point coming on a webinar and being told things and having actions to do and not taking action. So I just thought, what are the 5 most important things that you need to do when you finish this webinar in the next couple of days? So first of all, you need to make a decision on how you're going to import clear your shipments. We're giving you the couple of options there. Absolutely apply for a deferment account. Absolutely agreeing on terms with your EU supplier. Make sure that their commercial invoices are in the correct format and that they have an agent in place to make them. And start to think about your stock levels now in November and December. Who knows what's going to happen in January? Make sure you have enough stock. I'm not telling you to stockpile, but just be aware, make those decisions now, and start speaking to your suppliers now. We've seen a huge increase in imports. It's even this week and last week, as people start planning for disruption in January. I published a 24-page Brexit survivor guide for logistics managers and supply chain managers about 6 weeks ago now. And I think we got printed 300 of them, and we've already sent out 280 physical copies of this guide. It's everything that you need to know for exporting to the UK, to the European Union, and importing from the European Union. All the topics I've covered today have been covered. All the topics I covered in the last webinar have been covered, plus a lot more. So we don't have an awful lot of physical copies of this guide left. Obviously we can send digital copies of it. So if you'd like a copy of the guide, just email us at brexit@spaceglobalfreight.com, and we will get as many of those physical copies as we can out to you. Okay, almost finished now. Put this slide up the last time. The most important slide, I think, of today's presentation. Trade isn't about goods, trade is about data. Goods sit in the warehouse until data moves them. That is very, very important. You really absolutely need to be providing data to us or to your customs broker in an accurate format and in a timely manner, because you don't provide lack of data in that way. This is what's going to happen. So lack of data stops the collections being organised. Lack of data stops trailers being loaded. It stops drivers departing. It stops drivers at customs offices. It stops the drivers getting on the ferries. It stops the deliveries being made. It absolutely stops everything. Actually, doing customs is not that complicated. Completing an import or an export declaration is not that complicated. What we need is data, and we need correct data in the right format. We need correct EORI numbers. We need correct commodity codes. We need CPC codes. We need Incoterms. If we've got all of that and we've got it in a timely manner, everything should run fairly smoothly. Okay, so that's pretty much it today, apart from a few more Q&A questions. So yeah, we've opened a customs agency called the Espace Customs Consortium. It's about £1 a day to join, and there are many benefits to join. About 20–30% off the customs fees that we'll be charging. For exporters, there's a huge benefit that we'll list you on our authorised consignor approval. We can run through the Brexit, so the Brexit audits, the 40-point audits for importers and exporters, to come up with an action plan, access to a European-wide network of agents to help your European suppliers to make export declarations. But time is of the essence. As I said before, we're onboarding people at the moment. We're checking data. We're making test entries. We're getting people Brexit ready. We will not have the time to do this in January. So if you're serious about it, do the audits yourself, or we'll help you. Join our consortium. We'll get you Brexit ready with a couple of hours of our time. As you can see there, the next webinar won't be a webinar. The next Zoom time we meet will be a meeting. So it will be an interactive session. There'll be a 10 or 15-minute presentation from me at the start, looking at recent developments, key points for exporters, and anything that I've not covered over the last 2 webinars. And there'll be a 20 or 30-minute Q&A. So your video cameras will be live, your microphones will be live. You'll be able to mute those and turn off your cameras, and we'll have a real proper Q&A as you do on any of the Zoom calls you've had with other people. So we'll move on to the Q&A in a minute. But if anyone is also an exporter, this is the details from the exporters webinar I did a couple of weeks ago. There's the link on our YouTube channel. These are the topics I covered. If you are exporting to the European Union, on dedicated trucks or dedicated express, you absolutely need to understand Union Transit. If you've got 9 minutes, that's 9 minutes well spent. If you're sending dedicated full loads and dedicated express loads. Yeah, and that's further details for us. So yeah, that's customsclearanceeurope.com, our customs clearance product. Brexit app. Any questions? Anything you want to know? Just drop us an email at that. If you want a guide, drop us an email. And Rob, who's been on the webinar today, he will gladly speak to you at a reduced price of £99 an hour of really, really great customs advice. Any complicated matters at all you have, or any just simple questions, you just want an hour's advice of someone that knows their onions, speak to Rob, drop him an email there. So we'll finish off now with any questions. If you want to have a look at any questions, Jeff?
Yeah, thank you. There's been quite a few on return goods. So goods have been sent out from the UK into Europe on a CPC 10, a permanent export, but they failed for whatever reason. How do we bring those back?
Oh, is this exporting now?
These that we've exported already, but they've failed in failed quality control, for example, in Germany, and they need to come back. So what's the process in bringing those back?
Want me to step in there, Tony?
Do you want to take that, Rob?
Yeah, sure. Yeah, I noticed in chat quite a lot of different questions on return goods relief. So to generalise, as long as those goods come back within 3 years in an unaltered state, then duty relief is allowed. You will need to provide the export documentation and the export declaration to your customs broker. But there are a number of qualifying criteria. So without knowing the specifics, I won't get into that today. But if you just search on a search engine, HMRC return goods relief, you'll find there a pretty straightforward guide that tells you what those criteria are. Somebody specifically asks, what if I don't have a return invoice? Then your broker would typically rely on the export documentation to establish the value when they came back.
Okay, anything else, Jeff?
Yeah, can importers, if required, pay import duty and VAT directly using FAST, the flexible accounting system? That they absolutely can. There is no need to have a deferment account if that's what they want to do. So that is another option, to use FAST, flexible accounting system, to pay duty.
I'm not quite sure why, Rob. Why? Yeah, I suppose it is an option, but if a duty deferment account is free to set up now, up to £10,000, it would seem the most logical way to go about deferring duty.
Yeah, I would agree. FAS is around. It's used today in a small amount of cases. Of course, today you're paying import VAT at the border, so the numbers to pay at the border today are typically significantly higher than they will be in January. And some traders today use that facility rather than using their agent's deferment and obviously saving any admin surcharge. But as you've said throughout, Tony, I think anybody who's importing up to £10,000 worth of duty from January, why would you not apply for your own deferment?
Yeah.
Chris Lewis has asked, will the current turmoil in UK container ports, due to the problems in Felixstowe and knock-on issues in other ports, restrict the scope for using alternative routes to Dover, Calais or the Eurotunnel? I think it will, Chris. I think that's why we're looking at rail freight as well, and the short sea. So I think it's wise. I think this is where probably a freight forwarder comes in, that they're not restricted to one particular port. So yeah, I would suggest you engage your freight forwarder and suggest you bring your concerns to them and look at other ways of.
I just think you need to have a range of options available. You need the driver accompanied options. You need potentially unaccompanied options. You need maybe short sea options, and you need intermodal options. Air freight is another option. I haven't gone into that, but you know, it's an expensive option. But the more options you have available, then the less chance you have of delays, or the greater chance you have of getting your goods on time, particularly if you're running time critical production lines.
Okay. Cora Christensen's asked, do we need to consider commodity codes from suppliers outside of the EU, or will this remain the same? So that will absolutely remain the same. This is just an EU issue at the moment.
Yeah. Okay. Anything else on the questions, Jeff?
Just having a flick through now. Bear with you 1 second.
Yeah.
Quite a specific one, Rob. You may be able to help with this. We import solely foodstuffs which are in the UK VAT exempt. Will this continue after the 1st of January, even though VAT treatment is applied to foodstuffs in the EU?
Yeah, I've not seen any change to the UK's classification of products for VAT. So whatever the UK's VAT rules are today, I've not seen any indication that they will change on January the 1st in terms of VAT application to individual products. Of course, from January, the UK would be entitled to do as it sees fit with applying VAT. So I suppose things could change, but I've not seen anything as yet. I will say it's not my particular area of that, so it is worth a dig around online.
Yeah.
Okay. And Tim Reed's just asked about around the GVMS system. Is it the hauliers' responsibility to complete GVMS on inbound?
So GVMS, it's my understanding, Rob, is not in operation from the 1st of January, and will only be in operation for exports to Northern Ireland.
Yeah.
What was the question again?
So I think the thrust of the question is, as a trader, do I have to worry about GVMS?
No.
It really is an issue between the broker, forwarder, and the haulier.
Yeah.
So if you're employing a forwarder or a broker, GVMS really is focused on moving the HGV vehicle and connecting it to port systems. So if you're using an intermediary like a Espace, then really that's between them and the haulier to coordinate.
And there's just one final one from Carl Gillett. Are the tariff codes being changed to a simplified 8-digit code for imports, exports after the 31st of December? So my understanding is that we need an 8-digit code for exports, but you do need a full 10-digit commodity code for imports.
Anything to add, Rob?
No, nothing to add to that. That's my understanding too.
Yeah. Okay.
Okay, one final one, sorry if I may, from Shally Lawrence. If we purchase our goods and warehouse in Belgium and then are importing them, are we the exporter? So you would be the exporter of record at that point, yes.
Okay.
Okay.
Okay,
all.
so we're done. Okay.
Yeah, that's in. Yep.
That's great. So there's the link if anyone's interested. It is going to be a very interactive session the next time on the 11th of December. There's the link to join the Zoom meeting. Anything that changes between now and the 11th of December, I'll be updating everyone in that meeting, exports and imports. And it's just the last push really to get people ready and to get as much information out to them. So the slides and the recordings should be coming out to you all tomorrow. Thank you for all your time, and I look forward to seeing you on the 11th of December. Thank you very much.